summary to people out there, what is a broker and why is a broker, one of your number one advisors you should have involved on day one?
Absolutely. Well, what a mortgage broker basically is, a broker acts as an intermediary between the various lenders that we have on our panel and the individual that's actually out there searching and seeking a home loan. So we broker transactions, we broker applications or home loans. So we're just basically an intermediary between the bank and the purchaser.
So, if I say, I don't need a broker, I'm better than you,
yes,
perhaps I could maybe go to 1 or 2 different banks in the time you would go to 28 banks.
That's correct. Yeah, so I always use this analogy. If an individual's in the market for a home loan, the time that it actually takes, we're here just near Bay Street. Every major bank is on Bay Street. The time that it actually takes to go into 4 different branches, sell the same story to that particular bank, there's a 4 or 5 hour process. When you sit with a broker, after 2 hours, you have access to anywhere between 28 to 32 different lenders. All the lenders have different types of policy. They use different types of calculators for servicing as well. And you may find that you walk into the CBA and you don't qualify for the CBA, but two doors down at the Westpac, you may qualify because you fit their criteria. And especially with first home buyers, first home buyers really have to do their research.
Yeah.
There are certain banks that are very, very aggressive to assisting first home buyers, whereas other banks may be a little bit reluctant to take on first home buyers. And you really have to know that space.
Yeah. So that was a really interesting point you posed about, you might go into one bank and they knock you back, but you can go in the next bank, same circumstances, and they'll say, yeah, we'd love to help
Absolutely.
you. So, for people out there, how much money do you suggest, or, whether it's ratios or whatever, do people kind of need to know that they have to have in order to buy their first property?
Absolutely.
Obviously, it's going to be price dependent, but perhaps you give some insight that they went to CBA and they knocked them back, and then they went somewhere else.
So if I use an example, let's just use a $500,000 property for argument's sake. The first thing that you're going to need is obviously to secure the property, whether it's off the plan or completed. Most vendors want a 10% deposit.
Yep.
Yeah, so there's $50,000 that you need up front just to secure the property. What then you have to do is work out the property costs that are associated with that.
Mm-hmm.
Those property costs are stamp duties, they're stamp duty applicable.
Yep.
Now, technically, with a lot of first home buyers, depending on the value of it, you get the stamp duty concession, so there's no stamp duty applicable to it, but you still have to account for certain property costs. Now, if you're purchasing in a postcode, some banks might be a little bit reluctant to fund into that postcode. So if we use CBA as an example, the first home buyer walks into CBA, they need a 90% LVR loan, meaning 90% of the property purchase value. And what if CBA in that particular postcode have a policy where it's only 80%?
Yep.
So you get declined, not on the basis that you're not creditworthy. You could be very, very creditworthy, but you don't have the additional 10%, the difference between 80 and 90 for argument's sake that you need, and you get knocked back from the CBA. Whereas you walk 2 doors down and the Westpac, for example, They don't have any limits on any postcodes.
And, for first home buyers, it can be quite demoralizing. And potentially, if you went to that bank first up and they said, no, you're going to need to save another 10% before you'll come through, and you don't have a broker that knows to either not take you to that bank or hang on, that's the policy and change it, you could be waiting another 10 years. It's, and then prices go up and you end up backwards and become a lifetime renter.
Absolutely. And what happens every 12 months, you've seen what's happened with the property market, even during COVID over the last 2 years. The property market's gone up quite aggressively. So 2 years ago, the difference between 2 years, you potentially had the affordability, you went to a broker or to a bank, I should say, you get declined based on that bank's policy. You think you can't actually secure that particular property. 2 years down the track, you've actually saved a little bit more. That same property, it's gone up in $70,000 in value, but you only saved an extra 20.
Yeah.
So you're still out of the market. And you really have to do your research from that perspective. There's many, many different ways to structure loans as well. And I don't know whether you want me to go into it, but even things like getting parental assistance, security guarantee against mum and dad's property, for example, servicing guarantees from mum and dad. There are some banks that offer that. Not all of them though. So you have to know which ones actually offer that.
So that's a good segue. We've had some questions in the past that came in over this week talking about how do the banks actually work out how much you can borrow? Now, I assume they all have their own systems, but is there a general sort of concept that, we talked about how much you might need, but then you can sort of look and say there's these other factors. You mentioned you can boost your ability by having a parental guarantee and so forth.
Absolutely.
What are the things that they look at that you can suggest to some of our listeners that are first home buyers to get themselves match fit and ready before?
Sure. So if we have a look at, let's look at different types of income. So if you have a set structured annual salary, there's no bonuses, there's no overtime. That's relatively simplistic because you've got your pay slips, you might need your group certificate from last year. So you know what your net pay is from that point of view.
Yep.
If you're an employee that is receiving overtime, regular overtime or unregular overtime, there are certain banks that, let's say your overtime's $30,000 for that year. If it's not consistent, one bank policy might be, we're only going to take 50% of that.
Yep.
The other bank policy might be, we'll take 100% of it. We don't need it to be on every pay slip, but you can show us consistency over the 2 years.
Yep.
And then all of a sudden, you have, you're servicing, you're credit worthy, and you have the ability to service that debt with that particular bank. And they are all different. I mean, when you look at the bank matrix, you go through it, and it's fascinating just how different their policies are. I think bonuses, for example, how do they account for bonuses? Most banks want to see 2 years worth of bonuses. They want a letter from the employer confirming that there's been 2 years worth of bonuses. When you look at other factors in the serviceability calculator, if we start with credit cards. And a lot of the mistakes that first homeowners actually make, I find, is that they're going out there, they're getting credit cards, they don't even use the credit cards a lot of the times, but they've got a $10,000 limit. Now, whether you've had that credit card in your wallet for 10 years, if you've never swiped it, the bank will still assume that you have the ability to maximize its limit. So it takes a percentage per month of what the limit is. So on a $10,000 credit card limit, you could, if you go to a bank that's assessing it at 6%, well, that's $600 every single month that they assume is a commitment. And all of a sudden it dilutes down the maximum that you can borrow. And they're the sorts of things that we teach as well.
I've got one that I think would be useful for our listeners because you shocked me. A good friend of mine, you helped her get a home loan recently, and you gave me an insight into the mind of women, and that she had done something that perhaps a lot of people along the lines with credit cards wouldn't realize can also hit them back.
Absolutely, and it's things like if you've got a credit card. Look, I've seen people operate so many different accounts.
I'm thinking of these multiple bank accounts that apparently you said that.
I was just working, there's a couple of things that we have to work through. So I was waiting for you to lead into that part, so I'm glad you did now.
I'm in shock, by the way, everyone. I didn't know that this seems to be a staple thing, that people have a different bank account.
Without a doubt. So some people I've actually seen, they've got a shopping bank account, they've got a school feed bank account, they've got a petrol account, they've got like 7 or 8 different accounts. And what happens, you have to be so conscious to be transferring money and making sure that there's money in that account every single month, because what will happen, banks will allow you to overdraw and go into negative. The minute that happens, that flags on their system that you've overdrawn your account. If you overdraw your credit card, I mean, that's a big thing too. Don't overdraw your credit card. Late payment fees, because in the bank's mind, what they look at that from a credit perspective, they look at that you're not responsible when it comes to your financial circumstances.
And look, and it's amazing to think, you might have a combined balance of $10,000. You let one of your multiple accounts go $1 overdrawn, and they'll straight away put a red mark.
$200,000 in one of your accounts. One of them overdraws. They're having to look at that account in their mind. And what also happens, and I hope this is a valid point to the listeners as well. There are banks out there that what they do, it doesn't even go to credit. It automatically does an upfront assessment.
Yep.
If you get declined on that assessment, it's near impossible to actually then push it through.
And these are almost fully or predominantly automated as well. So,
absolutely. So
you don't even have the human touch, I guess.
No. There's no human touch.
Yeah.
If it gets through that first section, then it'll go to the human touch credit. But if it doesn't, and where people get tripped up is adverse conduct on their savings account.
Yeah.
Just simple things like that.
So, for everyone out there, I guess these pitfalls and the reasons why you would use a broker, how soon before someone is looking to be ready to buy do you suggest they should come in and see their broker and have a chat with you about getting themselves ready for that?
Well, I mean, you and I...
The day of the auction, or?
Well, you and I often have these conversations. I mean...
The day after the auction.
Yeah. Well, some people do it 3 days before settlement.
Yep.
90 days almost after the auction. But look, we always use this philosophy. Everything starts with finance.
Yep.
If you're purchasing real estate, arguably it's going to be the biggest financial transaction of your life. And for probably 98% of Australians it is. yet they spend more time preparing for a holiday and do more research when it comes to a holiday than what it does to actually purchasing a house. Even before you are considering, the marketplace, the suburb, the type of product that you want to purchase, you need to go and get your finances in order. The beauty of it is also, if you sit down with one of our brokers internally here, if you do have issues with the way that you're conducting your accounts, we can put a plan in place for you as well. So you may not be able to purchase at auction, but if you're looking at buying an off the plan product, we'll make sure that on the day that you're looking at purchasing that property, that we have a pre-approval for you based on your circumstances today. Which also the developers like to see as well, because the probability of it settling in 2 years' time is significantly higher. And then what we do is we teach and educate how to manage simple things like your bank accounts to prepare you, whether it's in 2 years' time or in 6 months' time, to make sure that you don't have any issues. The benefit also is, and this is the waffling part now, Joe, so I can talk forever. And because I'm so passionate about it, I actually love, and we enjoy dealing with first home buyers, providing that education, even sitting down with mum and dad and going through the process with mum and dad and all that sort of stuff, and just making sure that mum and dad are comfortable with us, that their child is in good hands from that perspective as well. And then what we also encourage, we'll touch base with them every 3 months. Have you changed your employment? That's a big one too. If you've changed your employment, a different industry, 3 months before that off the plan property is settling, you're going to put yourself under duress.
And these are all the things that going direct to a bank, you're not going to get these value add because you're just another number.
Good luck if you have the time getting an appointment these days. And best of luck if you think that the banks have got that time to provide that education and things like that too. And you'll find also it's very, very difficult to get a pre-approval directly from a bank if you're buying off the plan.
Got it.
There's no incentive for them.
All right. We've considerably gone over your time allocation, and I think we could probably go on. I'm guessing most of you are finding this really informative. We could go on and on. As I said at the start, we will be touching on finance every single week. So hopefully we'll have Becky back on most weeks. We'll bring in some other people as well. And I think this is a topic that's been really, really useful because, as you said, and we always say to everyone, it starts with finance. There is no point in going out and looking at a property when you don't know your combined buying power. So really, really important. And hopefully everyone out there, you got some good value from today. I know there'll be plenty more questions, so send them through to us during the week. We'll make sure that we plan out the next month or so in terms of the topics we touch on to make sure that we get this important information to you. And of course, if you do want to move forward faster, then feel free to reach out to us. In a moment, when I wrap up, I will show you the best way that you can get directly in touch with Becky or anyone else in the team as well to talk about that.